something that I've learned is that you shouldn't really be investing in the stock market, investing in other companies. That's what you're doing when you're investing in the stock market until you've maxed out your IRA. Whether you are doing a Roth IRA or a traditional IRA, that's up to you. Uh, I made a video sharing the difference between both of them. I'll link that up in the corners. But I'm using a Roth IRA because it's each has their own tax advantages. But a Roth IRA, the money that you put in, it's your money that's already been taxed, but you put it in, it grows, and when you pull it out, you're not taxed on any of the gains. There's zero tax when you pull out your Roth IRA. Uh, there are stipulations of if you pull it out before you're 59 and a half, before you've had it for a certain number of years. But what I'm putting in here is it's for retirement. So if you're putting it in for retirement, then you're good. You just don't pay tax. And that's why you're only allowed to contribute $7,000 every year to your IRAs. That's both of them combined. So I have no reason to have a traditional IRA this year. So all 7,000 is going into a Roth IRA. And I made the mistake of having a different portfolio and putting a few grand into stocks. And so that's sitting there, and then learning about Roth IRAs. And now I'm contributing there. It's not really like a really bad mistake, but I learned from that like, oh, like this money that I put in here into this other money market account, it's going to be growing, and when I pull it out, I'm going to have a tax. There's going to be a tax, a capital gains tax, and so I'm going to keep it in there anyways. But now I'm like, okay, I should have been contributing to a Roth IRA first. And here's why. For any of you who haven't contributed to a Roth IRA, I'm going to show you my screen and show you how easy it is to contribute to a Roth IRA and actually be able to pick different stocks. So you contribute the 7,000 here. Let me just pull up my Robinhood account. So that's what I use for this. If you're like, hey, how do I make a Roth IRA in the first place? You can do it yourself from your phone. And this isn't an ad for Robinhood or anything like that. It's just what I use. Um, so let's just get into it. All right. So here is my Robinhood account, my Roth IRA account. You can see that's how much I have in there, 2,111. And something really cool about this is I didn't contribute all of that. I contributed 1,992. So as you can see right here, that's what I contributed. But I have Robinhood. When you have Robinhood Gold, it's like $5 a month, and I have that. But when you have that, as you can see here in the middle, Robinhood matches 3% of what I contribute to my Roth IRA. So they added that 5976. That's what they added, and it's totally worth it for me to have Robinhood Gold because I'm contributing that amount. I'm making more than $5 a month just from that 3% matching that they offer. And so that green bar there that you can see, that's how much I'm allowed to contribute throughout the year. So I'm about a little bit more than a quarter of the way. And once that green bar is fully filled, I can't contribute to my Roth IRA anymore for the year of 2025. Once that happens, that's when, and I still want to put money into the market and do my dollar cost averaging. Once that green bar is filled, that's when I'm putting that money into a regular portfolio that is not tax advantaged like this Roth IRA. So you should max your Roth IRA or your traditional IRA all the way out. Then once you've done that for the year, then you start putting money into your regular accounts. And then once 2026 starts, you do the same thing. Max out your IRA first, then put money into other accounts. And this is if you're investing like me. If you're trading, then you obviously don't want to do that. If you're trying to make quick trades and just make money really fast. So this is how easy it is to actually contribute. So see, there's that button there at the bottom. It says contribute. And so let's see. I think I'm about to go through. Yeah, how do you want to invest? I'm going to use my past recommendations, and I just clicked buy again. I already had money sitting in there. The cool thing about this is, like, you put your money into the IRA, and then you tell, this is how all IRAs work. You tell, okay, now the money is in the IRA. It's like a tax advantage shelter. Okay, where do you want to deploy it? What stocks do you want to buy with this? So you're still buying. You can still pick any stock you want, but you just do it through your IRA. And so, as you can see here, I had 339 available to be able to deploy, and I'm putting 200 of it in. Um, and that's because I'm using the recommendations that they picked for me for this. Um, you don't have to know everything about stocks. You can just tell, Robinhood will give you a brief survey about what your goals are and your risk tolerance, and when you want to pull your money out, what year you want to retire by, and then it will pick stocks for you. So you didn't have to get all nerdy into this like me. So I contribute about half of what I put in off of their recommendations, and the other half I contribute. I specify exactly what stocks that I want. And so you can see right here, these are the different stocks that I have. Some of them, you can see that there's 0 shares, like CoreWeave, BlackRock, Meta, Tesla, um, the Vanguard, S&P 500. Those are, they say 0 shares, but they're still listed here, and that's because I have a pending order. It's Saturday right now, and so Monday morning at 9:30 a.m. when the market's open, that's when that order will go through, and we'll see that there's shares there. But it's super simple, super easy. It's not really hard. Um, if you want to check out Robinhood, I'll leave a link down below. You can use that. But honestly, you can do this for any anywhere where you have a money market account. Like if you have Fidelity, or if you have Charles Schwab, or whatever. You might even be able to start one of these through your own bank, depending on what bank you have. JP Morgan Chase, and this has been. I wish I knew this before I just started putting money into the market, and that's why I wanted to make this video. Uh, you're going to end up saving a lot more on taxes if you contribute to your Roth IRA or your traditional IRA before you just start putting money into the market. Max that thing out. Max that thing out, especially if you're investing for the long term. If you're investing and you don't plan on using any of that money for 20 years, 30 years, like me, that's actually a really good thing, because it doesn't matter what the market is doing right now. Just dollar cost average into your IRA, max that thing out. As soon as it's maxed out, then dollar cost average into the regular market for the rest of the year. Um, and so if you're contributing something like $500 a month, well, you're never going to max it out because you're contributing $6,000 a year. I contribute more than that, anywhere between $1,000 to $2,000 a month. So that means halfway through the year, a little bit more than halfway through the year, mine will be maxed out, and then the $1,000 to $2,000 a month will be going into the regular markets and a regular portfolio that's not as tax advantaged, but it's still good to do. So hopefully that was helpful for you. If you want to know, like, actually the different tax advantages between both traditional IRA and Roth IRA, there's a video right up here that you can check out. I go over the difference between both of them and why I picked Roth IRA and what might make the most sense for you, depending on what your situation is. See you in the next one.